Hello and good evening, everyone. I am Rose Lopes, Senior Partner and Manager of our Financial Services and Employee Benefits Division at the Sylvia Group, an Alera Group agency, here to welcome you today to our annual Medicare webinar. While we give late arrivals another minute or two to join us, I'll go over a couple of procedural matters. First, be aware we will be recording this webinar and everyone will be muted during the presentation. Should you have a question, I ask that you type it in the Q&A box versus the chat on the bottom of the screen. I'll keep an eye out for questions that are submitted during the webinar, and if we receive any, I'll share them with Kristen, our featured presenter. And now, to discuss these topics, I'll introduce Kristen Edwards. Kristen is an account executive with the Sylvia Group, specializing in Medicare and retiree-based insurance, certified to sell Medicare supplements, Medicare Advantage, and prescription drug plans. She joined the Sylvia Group in 2020 with over 15 years of insurance industry and carrier experience. Kristen is also on the board of directors for the North Shore Women in Business. Today, Kristen will be presenting on Medicare basics, how and when to enroll in Medicare, avoiding premium penalties, and how private insurance plans can help cover the costs that original Medicare leaves behind. And with that, it's my pleasure to turn the mic over to Kristen.
Welcome, and thank you all for joining me this evening to get more familiar with the wonderful world of Medicare. Thank you, Rose, for the introduction. As Rose mentioned, I have been in the insurance industry for my entire career, just over 15 years. And this evening, my goal is to get you more familiar with Medicare and the terminology, but not to make you experts, but hopefully lay a solid foundation of knowledge that we can build on, as well as answer any questions that you may have, whether it be at the end of my presentation today, or if you aren't comfortable asking in this setting, we can connect privately at a later date following the webinar. So today we're going to talk about the timeline for enrolling in Medicare, any premium penalties, what original Medicare actually means, and the alphabet soup of Medicare A, B, C, and D. Also some other considerations when looking to enroll. So generally you're eligible for Medicare when you turn 65. This, of course, is outside the possibility someone could be eligible prior to age 65 due to disability. When you're turning 65, the government gives you an initial election period, or what we call the IEP, and this is a 7-month window to enroll. So it constitutes the 3 months leading up to your birth month, the month of your birthday, as well as 3 months after. When applying in the first 3-month window leading up to your birth month, it's generally effective the first of the month that you turn 65. So an example of that is if you're turning 65 on October 17th and you apply within the month of July, August, or September, your coverage would be effective October 1st. If you apply in October, it would be effective November 1st. And then when we move forward to the latter 3 months, the enrollment is delayed by a month, 2, or 3 respectively. If you choose not to enroll at this time and you don't have coverage through an employer, the next available time to enroll is the Medicare General Enrollment Period, or GEP. That runs from January 1st to March 31st. With an effective date of July 1st. So if you don't have any creditable coverage or a qualifying event to enroll, this would be the period that you would enroll, and a premium penalty could apply in that scenario. The special election period, or SEP, you see at the bottom of the screen, happens when you have a qualifying event, such as a loss of group health plan coverage, either from you or your spouse's employer. Automatic enrollment into Medicare is something that only happens in special circumstances. Otherwise, you do have to take an active role in enrolling in Medicare. Generally speaking, folks turning 65 and have paid into the system the full 40 quarters are eligible for premium-free Medicare Part A. So really the decision points that we discuss are around Medicare Part B. There are a lot of different ways that you can enroll. You can do it online if you prefer to do it that way. You can visit your local Social Security office. Of course, COVID has presented us challenges with the in-person appointments, but hopefully that will change. And then over the phone, they had been doing telephone appointments with folks to help them through the enrollment process. So there are definitely resources out there to get enrolled. So these days, a lot of us are working past the age of 65. And if that's the case, you may consider delaying Medicare if it makes sense for you. You can delay enrolling in Medicare without a premium penalty if you or your spouse are actively working and enrolled in a group health plan for an employer with 20 or more employees. You also want to consider if you're enrolled in a high deductible health plan and contributing to a health savings account, the IRS does have specific rules that apply to these tax advantaged accounts that you definitely want to consider when thinking about enrolling or waiving. Annually, employers also are required to report to employees by way of a notice that their prescription drug coverage is creditable, offered through the group health plan. And that's another way to, of course, avoid any premium penalties. So as I mentioned, employer-sponsored plans with less than 20 employees may not eliminate the premium penalty for Part B, but also if you're enrolled in COBRA, which is the continuation of your group health plan coverage, that also would not be considered creditable coverage as by way of avoiding the premium penalty. The premium penalties for Medicare Parts B and D can add up over time the longer you wait, and it is added to the base premium and it stays with you as long as you're enrolled. Other considerations when enrolling in Medicare Parts B and D are the income-related adjustments to the base premium based on your modified adjusted gross income. These amounts shown here are banded by income level. The Part B column is the full premium amount based on, of course, 2021 numbers. We're hoping that 2022 numbers will be released, in these coming weeks, but definitely before January 1st. The prescription drug column shows the additional amount, which is added onto whichever plan you select. So each plan has a different premium amount. And so that amount that you see there added to your plan premium would apply if you fall into those categories. It's important to note that the Part B premium is paid quarterly to the government, or it's deducted monthly from your Social Security check if you're collecting that. Now that we've discussed how and when to enroll and all the considerations and premium costs, let's dive into what Medicare coverage actually is and break down the alphabet soup. So we have Medicare Part A, which is going to be your inpatient hospital coverage, as well as skilled nursing care, testing that happens while you're inpatient in a hospital, and as well as home health care and hospice. Things that fall under Medicare Part B are your outpatient coverage, such as doctor visits, whether it's your primary care or a specialist, physical therapy, same-day surgery, and other just general lab tests and x-rays in the outpatient setting. While coverage under Medicare Parts A and B are comprehensive, there are still gaps in coverage, which a colleague of mine uses the analogy, which I love. Medicare A and B are like a block of Swiss cheese. The gaps are the holes in the cheese, and so we mark them in yellow when we help educate folks about original Medicare. So without additional coverage, Medicare beneficiaries could have significant out-of-pocket expenses when healthcare needs arise. And again, just a disclaimer, these numbers are all based on 2021 numbers. Generally speaking, they do tick up a little bit each year with inflation and other things. So some ways that you can cover these holes in the Swiss cheese are with Medicare supplement, or what we call Medigap plans, or with Medicare Part C, also known as Medicare Advantage plans. And then of course we have our prescription drug plans, or Part D. So let's just take that a little step further. So Medicare Parts A and B, your original Medicare, is the coverage that we apply for and get through the government when we're initially eligible or at a later date. Part C, Medigap, and Part D are the options we buy through private insurance companies to help cover the holes in the cheese. And deciding on these plan options is where I come in. I help Medicare beneficiaries pick the right option for them based on their health needs, budget, and lifestyle. Medicare Advantage plans, Part C, work more like your traditional HMO and PPO plans that you may be used to today through your employer. It wraps up your medical coverage into a nice, neat package, including prescription drug coverage and other preventative value-added benefits. Medicare supplement plans will supplement original Medicare, picking up some of those specific amounts we showed on the previous slide in yellow that are left behind, acting as more of a secondary insurance to Medicare. These plans cannot include prescription drug coverage, which is where the standalone prescription Part D plans come in. So Medicare Part D drug coverage sometimes can look a little bit overwhelming and confusing. So these plans, again, as I mentioned, are offered through private insurance companies. They can be standalone or part of that Medicare Advantage HMO or PPO plan. The government does oversee these plans and develops a base plan each year that the insurance carriers do have to kind of use as a guide or abide by. It's a minimum standard, so generally the insurance carriers do like to create plans that are richer than the minimum standard to attract new customers. So shown on this slide is the minimum standard for 2022. There is a maximum deductible amount of $480, which means that this is the amount a beneficiary could be liable for before the plan starts beginning to pay for their prescription drugs during the calendar year. Once that deductible is satisfied, we enter into what they call the initial coverage phase, where you share in the cost for your prescriptions by way of co-payments or co-insurance until your total drug spend, including the carrier or whichever insurance plan you pick, reaches $4,430. Now, I don't want to scare you with that number, but a majority of the beneficiaries do not hit this amount. But for the population that does, you would then enter what we call the coverage gap, or some people have coined that as the donut hole, where you pay 25% of the cost of brand name drugs, which really only lasts for a period till you reach $7,050. And that means the combined cost for you paying the 25% and the insurance plan paying 75%. When you hit that total amount, which is a lot of money, we're not minimizing that, you then enter the catastrophic phase, and that's where you're only responsible for a small nominal amount for the remainder of the year. Of course, these numbers all reset each year on January 1st. So when choosing a prescription drug plan, we take into consideration the pharmacy you prefer to use, mail order opportunities, or home delivery service, and most importantly, any current medications and dosages, so that we can really pick the right plan that works for you. All plans do have specific networks of pharmacies, whether they're standard pharmacies or preferred pharmacies for that particular plan. And they also have what we call a formulary, or a preferred list of covered drugs and where they fall as far as the co-payments. So Sorry, I went through that a little quick, but I'm just gonna wrap up here and then we'll have plenty of time for questions, which I hope is helpful for everyone. But you know, I've walked through this, hopefully not too fast for everyone. Hopefully some of the information stuck and I kind of broke it down so it's not as confusing as it is with all the mail that folks get. I've included my contact information here on this slide, and I really, you know, my role in this process is to be your trusted advisor and to help you compare options that fit your needs, budget, and lifestyle. I've actually been certified to work with many local and national carriers to provide choice for my clients, so I can hope to help you in the future. And Rose, that would be the end. So I would love to open it up for folks to ask questions.
Yep, so I did allow folks to be able to unmute themselves if they wanted to ask a question.
Sure.
Or once again, you can go ahead and type into the Q&A.
I have a question.
Sure.
Go ahead.
I'm just wondering if I'm still employed. I was a little confused in the beginning. If I'm still employed and am on a group health care plan that's really good and I don't really feel a need for anything more, but I'm turning 65, what is it that I have to, I know you have to do something or you get penalized later. I have to enroll in A and B. Is that what I need to do? Or, you know, if I'm basically not going to use the Medicare for now?
Right. So if you're going to continue to work and you're on a plan that you're happy with, you don't have to enroll in Medicare. I always recommend that you can always contact Social Security. They're going to send you a bunch of information if you qualify based on the 40 quarters. You could just enroll in Medicare Part A. It will just kind of sit idle on the side. It doesn't cost anything. And then when you do decide to retire, then you could at that point enroll in Part B, because that's your special election period when you retire.
Okay, because I was under the impression there's some penalty if you don't do something initially, and I don't know what that something is.
Yeah, so the penalty will apply only if you are working for, like if you're self-employed or you're working for an employer with less than 20 employees. Then a penalty could apply, or if the prescription drug coverage offered through the employer-sponsored plan is not considered or deemed creditable, which really is just based on the minimum standard, the base plan for that coming year, 2022 in your case. But your employer generally will send you a statement right around this time every year to let you know. It's
Okay.
required by law. So yeah, don't be scared of the penalties. If you're still working, which a lot of people are, you're not going to be penalized as long as you enroll within your special election 8-month period.
So I'd have to enroll within that. I guess that's my question. So I do have to enroll in that 8-month period
After you retire.
after you retire. Okay. All right. Thank you.
Mm-hmm.
I do see a couple of other folks unmuted. I just didn't know if we had any other questions.
I have a question.
Go ahead, Carol.
Oh, thank you. How long does it take? I'm hoping to switch my insurance pretty quickly because I've got a $2,000 deductible where I work, and for the first time now I need some medical care and I don't want to deal with that. How long would it take? Yeah, I just need to get my knee fixed somehow or other. So do you think by November, if I moved quickly, I could get on board?
So it depends.
With Part D?
Yeah. So if
I mean, not
are
D,
you,
B. I'm sorry.
so you're already enrolled in Medicare A, but you're
Yes.
thinking about enrolling in Part B?
Yeah, I don't
Okay.
need inpatient or anything like that. I just need physical therapy or something.
Yeah, I mean, Carol, we could always take that question offline too, but generally speaking, you would need a qualifying event to go off of your employer or group plan that you're on right now, and get onto Medicare Part B. Outside of any specific qualifying event, it would only be the general enrollment period that you'd enroll in Part B.
Oh.
So we could talk offline, because there's certain
Okay,
scenarios that definitely come up where there's a way around it.
Oh, okay. Thank you. When is open enrollment? Did you say that at the beginning and I missed it?
Yeah, so the general enrollment period to actually enroll in Medicare, if you don't have a qualifying event and you've already turned 65, the general enrollment period is January 1st to March 31st with an effective date of July 1st. So if you had no other extenuating circumstances, then that first effective date would be July 1st.
Wow, okay.
So Kristen, we did get a question specifically about Medicare open enrollment, and that's coming up soon, correct?
So the annual election period where you can make plan changes, so you're already enrolled in A and B and you want to look at plan options like Medicare Advantage or Medicare Supplement or Part D plans. This is your time period from October 15th to December 7th to either enroll for the first time if you've just kind of been waiting, or you know, if you've been enrolled in a plan for a year or two and you want to make some changes, this is the time that you can make those changes.
Any other questions? All right. Well, thank you, Kristen, and thank you to all of our attendees. This concludes today's webinar. In the upcoming days, we will send out a link with the recording, along with an update on any additional questions and answers that we may have received. We do hope that you found this informative and useful. Speaking on behalf of the Sylvia Group, I invite you to contact us if we can be of any further assistance in addressing your insurance needs. Thank you once again for joining us, and enjoy the rest of your evening.
Thank you.